Hi, it's Suzanne Craig from the New York Times Deal Book. We're here today, I'm here with Jay Heller from NASDAQ Market Intelligence to talk about the initial public offering of GM. It looks like it could go as early next month. Jay, what should we be looking for on this?
Well, I think there's a lot of things to really kind of focus in on the whole GM IPO, spectrum, as a whole. I mean, the valuation standpoint, anywhere from $50 to $70 billion, which is going to have a major factor and a major input on the share price. They do have to price it correctly. Right now, you're hearing the range anywhere from 20 to 25.
Just to back it up a little bit.
Yeah.
What's sort of a little bit of the backstory? The government injected, how much was it? Like $50 billion into this?
So the U.S. government alone, over $40 billion for a 61% stake. Now, the valuations from some of the private equity, the analysts out there, they're kind of evaluating this deal anywhere from $50 to $70 billion. And that has a major impact because depending on whether it's 50 or 60 or $70 billion will tell you whether or not the taxpayers in the U.S. that really kind of fronted GM the money, they're going to either make a few dollars or they're going to lose money on it.
What do you think is going to happen? It sort of seems like initially we were hearing maybe there was going to be a break even on this, and now it sort of looks like it could go at the lower end, which would be 20 to 20, maybe 20 versus 25 a share. It could be like it could take a while for the government to recoup their monty on it.
Yeah, without question. It's a very sticky situation because what's going to happen is even if they roll out 20 to 25 billion, 20 to $25 per share, the U.S. government is going to issue about $6 to $8 billion worth. But again, remember, they own $40 billion in the company. So the key factor here is now you're going to roll out a small percentage of your holdings, and now how is the street going to react to it? Are they going to say, all right, we like GM, we know the automotive space is really starting to pick up, we've seen Ford do really well, or are they going to say, well, you know what, GM, we like the turnaround story, they got rid of the debt, however, the U.S. government, as well as Canada, the union, and the bondholders, they still own a huge percentage of the company, so there's huge overhang, so it's kind of like a mixed bag.
Everybody sort of jokes it's not General Motors, it's government motors.
Right.
When do you actually think that we're going to see a full exit from the government from General Motors?
Gee, I think you got some time to go. I think they're taking it basically one step at a time. But there are good things really happening. Even, if you look at Ford, they're pumping money back into Michigan, about $850 million into the plants there, into the Detroit suburbs. They're going to start to hire. Hopefully you start to see the same thing from GM. But again, it's going to be on the product line. It's going to be what are they telling the street. And if there is demand and they don't oversaturate it with the initial offering, I think there'll be big demand, big pent-up demand for that product, and then they'll slice it out over time.
Thanks, Jay, for joining us today, and thanks everybody for watching. Again, it's Suzanne Craig with the New York Times and Deal Book.